If you've been watching the Atlanta housing market lately, you've probably seen the headlines. Market shift, homes sitting longer, price reductions. And if you're a buyer, you might be thinking, should I wait? And if you're a seller, you might be thinking, did I miss my window? The answer to both of those questions is in the data. And the data tells a very specific story. I'm Tim Trevathan, and I work with buyers and sellers all across Gwinnett County, North Fulton, and South Forsyth, and really anywhere in North Metro Atlanta every single day. And I've spent the last several years going deep on the numbers across every submarket I cover, from Duluth to Johns Creek to Alpharetta to Forsyth County. The shift is real, but it's not happening equally across North Metro Atlanta. So in this video, I'm going to cover what the Atlanta market looked like before all of this started, and what caused the shift, and why it happened so fast, and which North Metro neighborhoods are most affected and which ones are holding value the most. Let's go back to 2021 for a second. If you want to understand what's happening today, you have to understand what was happening then. In 2021, Metro Atlanta hit roughly 120,000 home sales in a single year. That is the peak. That is the benchmark. And if you are buying or selling during that period, you know exactly what it felt like. According to the Atlanta Regional Commission, by 2024, that number had dropped to just over 65,000 sales, about half of what it was 3 years earlier. So what made 2021 and 2022 so different? Three things all happened at the same time. First, mortgage rates were sitting at historic lows. We're talking 3% to 4% and even below 3%, and monthly payments that are simply not possible today. Second, remote work exploded during the pandemic, and people across the country realized they weren't tied to expensive coastal cities anymore. Atlanta, with its lower cost of living, strong job market, and relative affordability, became one of the top relocation destinations in the country. Third, inventory was almost non-existent. There simply weren't enough homes for sale to meet that wave of huge demand. So the result? Multiple offers on almost everything. Waived inspections, buyers writing letters to sellers begging to be chosen, homes disappearing from the market in days, sometimes hours, and in the luxury segment, according to the Luxury Realtor Group, inventory was running at just 2 to 3 months supply through 2021, 2022, and most of 2023. That kind of scarcity drove prices up at a pace that was never going to be sustainable long term. And then something made it worse. Sellers who wanted to move decided not to, because if you bought your home at a 3% rate and the current rate is 7%, selling means giving up that rate and taking on a much higher monthly payment on your next home. The cost of moving became too high for a lot of people. Economists started calling this the lock-in effect, golden handcuffs, as you will, and it kept a massive amount of inventory off the market for years. So to recap the before picture, massive demand, almost no supply, ultra low rates, and sellers locked into their homes. That combination created one of the most aggressive sellers markets Metro Atlanta has ever seen. That market is over. Understanding what replaced it is exactly why you're watching this video. So what exactly changed? The single clearest way to describe it is this: Metro Atlanta has moved from a seller's market into a balanced market. That sounds simple, but the implications for every buyer and seller in North Metro Atlanta are significant. So here's a number that tells the story. As of September 2025, there were 19,734 active listings in Metro Atlanta. That is a 4.4-month supply of homes, according to Norada Real Estate. A year or two ago, supply was hovering near 1 to 2 months. A balanced market is generally considered 4 to 6 months of supply. We are now inside that range for the first time in years. So what does that mean in plain terms? It means buyers have options. Real options. You can actually compare homes, think carefully, ask for a home inspection, and walk away from a deal you don't feel right about. That wasn't possible in 2021. You barely had time to think before someone else swooped in. Homes are also staying on the market longer. According to Homes.com, properties in Metro Atlanta were sitting for around 60 days in April of 2026. That's 3 days longer than the same time last year. 3 days doesn't sound dramatic, but directionally it represents a significant change in who holds the power in a negotiation. One of the biggest psychological shifts in this market is the automatic escalation premium that is gone. During the frenzy, buyers were forced to overpay just to win. They had to come in above asking, waive contingencies, and offer whatever it took. I remember helping a client who was trying to sell their home in Suwanee, and their home had an active leak in the basement. And despite that and needing a lot of updates, they still sold the home $10,000 over asking with 10 offers on the table. That pressure has largely evaporated. Now on buyer's side, they can now focus on the actual quality of a home, the lot, the location, the condition, and the long-term resale value without having to ignore all of that just to beat out 6 other offers. According to Real Wealth, statewide inventory has increased to around 3.5 to 6 months of supply, which is pulling the Atlanta metro into this more balanced environment. Mortgage rates stabilizing in that 6% to 6.3% range has helped some buyers come off the sidelines, though rates are still a factor we'll get into. This is a correction back toward normal, not a collapse. The market got overheated, then overcorrected slightly, and is now finding its footing. But in that process, the rules changed. Buyers and sellers who understand the new rules will do well. Those who are still operating by the 2022 playbook are the ones getting hurt. Now that you understand what the shift looks like, let's talk about why it happened. It wasn't one thing, it was 3 levers all moving at the same time. And when you see all 3 together, the current market makes complete sense. Lever 1 is the inventory went up fast. According to Georgia MLS data reported by WSB-TV and Yahoo News, the number of homes for sale in Metro Atlanta jumped 42% from December 2023 to December 2024. We went from 14,561 actively listed homes to 20,710 in a single year. And even as of August 2025, the Atlanta core counties were still reporting a 25% year-over-year increase in available homes, according to Atlanta Real Estate Forum data. Homes.com now ranks Atlanta 3rd among the 40 largest U.S. markets for total inventory with nearly 27,000 single-family listings. Where did all this inventory come from? Some sellers finally decided to move despite the rate environment. New construction continued adding supply across the North Metro corridor, and some investors started offloading properties as the appreciation game slowed down. Inventory builds slowly and then all at once. That's exactly what happened here. Lever 2, rates stayed sticky. The current average 30-year fixed mortgage rate in Georgia is 6.89%, according to the Curinos LLC data compiled by Experian of June 2026. That is 2 basis points below the national average, but it is still more than double what buyers were getting in 2021. Across Alpharetta, Milton, and the broader North Metro corridor, rates in that 6.5 to 7% range have forced buyers to make harder trade-offs. More money toward interest payments means less purchasing power, which means buyers are pickier, slower to decide, and more sensitive to price. The rate waiting game is real. Many buyers are still sitting on the fence hoping rates drop further. National forecasts suggest rates will likely settle in the mid 6% range through 2026, which means the 3% era isn't coming back anytime soon. That reality is starting to sink in for buyers across the market. Lever number 3 is demand that became selective. So this is the part that most sellers miss. Demand didn't disappear, it got smarter. According to Narada Real Estate, buyers are more deliberate now. They're visiting homes, doing the research, and taking time before making offers. And even when they are going under contract, we are seeing a high termination rate because the toleration level is a lot lower when it comes to seeing the repairs that they have to do. And if the sellers are not doing them and agreeing to these repairs, they're backing out. These buyers are going on to the next property. That is a very different psychology from 2021 when buyers were making decisions out of desperation. One market data point described it well. With over 17,000 homes on the market in Northeast Metro Atlanta compared to around 6,000 just a few years ago, buyers have choices. When buyers have choices, they stop compromising. Outdated kitchens, for example, busy roads, weak school zones, overpriced listings. All of those things used to get offers anyway because buyers had nowhere else to go, but not anymore. 3 levers: supply up dramatically, Rates stubbornly high, demand more selective than ever. That combination is what produced this shift, and it's playing out differently depending on which neighborhood you're talking about. So this is where the story gets really interesting. The shift I just described is not hitting every North Metro submarket the same way. Some areas are feeling significant pressure, others are barely moving. Understanding the difference between them is one of the most valuable things you can take away from this video. So let me walk you through the specific submarkets I cover. Gwinnett County. Gwinnett is feeling this shift for sure. According to Redfin, home prices across Gwinnett County were down 5.1% year over year as of November of 2025, with a median sales price of $406,000. Average days on market jumped from 46 days to 65 days over the same period. Zillow puts the average home value at $398,377, also down 1.9% over the past year. That softening is concentrated in certain price points in certain parts of the county. Homes that are well-positioned, well-priced, and in strong school zones are still moving. And of course, being priced right is one of the best indicators of moving homes. Homes that are overpriced are poorly represented are sitting. Duluth is one of the areas I watch very closely, given its significant Korean and Asian American community, and the data shows clear softening. Redfin data from March 2026 shows Duluth median prices down 7.3% year over year, at a median of $482,000, with average days on market at 60 days compared to just 29 days the previous year. Orchard's rolling 30-day data shows a different snapshot, with a median closer to $549,000 in days on market at 33, reflecting a shorter and more current window. Both data sets point in the same direction: more inventory, slower absorption, more leverage for buyers. Now, over on the Gwinnett and Forsyth County border, Beaufort is showing similar pressure. Orchard's current data puts the median at $465,000, down 5.1% year over year, with homes sitting on average of 41 days. According to Hank Bailey's December 2025 market update, nearly 40% of listings in Beaufort have had price reductions. That tells you buyers aren't accepting the first number they see. Now, if we're talking Johns Creek is holding. Redfin data from February 2026 shows a median sales price of $700,000, up 0.2% year over year, with average days on market at 36 days. That's up from 27 days, so it's not immune from the broader trend, but the price stability is notable. Zillow puts the typical home value at $651,407, also up slightly year over year. Johns Creek's combination of top-rated schools, established neighborhoods, and strong community infrastructure is acting as a buffer, so demand there is more durable. Moving on to Alpharetta, it's a more mixed picture. Redfin data from March 2026 shows median prices down 5.4% year over year at $724,000, with homes selling in around 43 days. But Zillow tells a slightly different story, putting the average home value at $656,261 and up 2.6% year over year. The divergence reflects different methodologies, but both data sets confirm that Alpharetta's inventory has surged significantly. According to Houseo, available homes in Alpharetta hit 683 in January 2026, a 25.78% year-over-year increase, with 151 new listings in that month alone. More supply plus more cautious buyers equals longer negotiation windows. Now, I have a buyer that's been looking in Alpharetta now for over 5 months, and we have seen a very strange tale of two worlds, where in just one city alone in Alpharetta, we see scenario one, where he is up against multiple offer situations, competing with a lot of buyers, and we're putting in over asking price offers and getting outbid. Whereas we're seeing other homes that are tremendously outdated, which is the reason why they're sitting on the market longer, and more of those are popping up, especially as the warm season, or the hot season of the market, we say, is past. Now, there are some areas, for example, near Avalon, Halcyon, and in the strongest school zones that are still attracting real demand. Moving on to Forsyth County, it's transitioning. Orchard's current rolling data shows a median home price of $653,750, up 1.4%, year over year, with a median days on market of just 17.5 days across the full county. Underneath that, active listings are up 16.4% year over year at 1,912 total homes. And according to Metro Atlanta Property Shop, about 50% of Forsyth listings have seen price reductions, with homes now selling at roughly 96% of the original list price. North Georgia Group put it well in January of 2026. For sale signs in Cumming and Suwanee are staying up longer than they used to. This is a transitioning market, not a buyer's market yet, but moving steadily toward balance. And one more number worth mentioning, according to the Luxury Realtor Group, the 1 million plus segment in Metro Atlanta has crossed into balanced territory for the first time since 2019, with 4.1 months of luxury inventory as of March 2026. So if you're watching the North Metro luxury market in Alpharetta, Johns Creek, or Milton, that is a meaningful shift in negotiating dynamics. School zone strength is the most reliable insulator. Homes in top-rated school zones, specifically in districts like Northview, Chattahoochee, Johns Creek High, and Lambert, are holding value better than comparable homes in weaker school zones. That's been true in every market cycle I've watched, and this one is no different. So we just walked through a lot of data across a lot of different submarkets. The gap between what's happening in Duluth right now versus what's happening in Johns Creek is significant. If you're relocating from out of state and trying to figure out which of these areas actually fits your budget, your school priorities, and your lifestyle, getting that wrong could mean buying in a market that's softening when you could have bought in one that's holding or overpaying by $50,000 to $100,000. So download my free Atlanta relocation guide at timtrevathanhomes.com/Atlanta relocation guide. On the neighborhood section, I break down each of these North Metro submarkets side by side, including school zone information, community characteristics, and price range context, so you can make a much more informed decision before you ever book a flight to Atlanta. Now, if you've been sitting on the sidelines waiting for the market to come to you, this section is specifically for you. The waiting game has a cost that most buyers don't calculate correctly. They look at prices and think, if I wait, maybe prices will drop. Or they look at rates and think, if I wait, maybe rates will come down. Both of those things might happen, but here's what actually happens while you wait. Let's start with rates. Sam Cater, chief economist at Freddie Mac, said it clearly. On a median price home, the rate movement we've already seen through 2025 could allow home buyers to save thousands annually compared to earlier in the year. Affordability is improving, but slowly. The national consensus from Fannie Mae, the Mortgage Bankers Association, and the National Association of Realtors all points to rates settling in the mid 6% range through 2026. Not 3%, not 4%. Mid 6%. The Mortgage Bankers Association also reported that purchase applications are up compared to last year, which tells you that buyers who have been waiting are starting to act. So what does this mean for you? Every month you wait is a month that other buyers are coming back into the market. So the window of least competition is technically right now. And as demand picks up, that leverage you have as a buyer starts to compress. Now, I would say in the local market, is there room for a downtrend to still happen? Yes, I would say until the end of 2026, but I don't know if I could say that for 2027, as we're now going through 4 years since the rate hikes in 2022 to see this stall in buyer demand happening. So by next year, we might see things start to pick up. On prices, Nerada Real Estate, citing NAR chief economist Lawrence Yun, forecasts median prices to rise 4% for the rest of 2026. These aren't crash numbers, they're appreciation numbers. So if you're waiting for prices to drop significantly, the data doesn't support it. So here's what eventually matters most for buyers right now. You have negotiating power that simply did not exist 2 years ago. According to Atlanta Agent Magazine, 2025 marked the clearest return to equilibrium the Atlanta market has seen since before the pandemic. More inventory means more choices, and more choices means you can take your time. You can request inspections. You can ask for repairs. You can negotiate on prices. Now, I have a story to share, my personal story. And it's not one that I would advise all buyers to do, but it just happened to work out this way. For me, I bought a house in Suwanee just a month ago. And at first, I thought that I was gonna have to put in a very strong offer because the agent said they had 25 showings in the first 2.5 days that were scheduled. So I thought I need to come in strong. So I submitted a strong offer. Come to find out, you won't believe it, I was the only offer on the table. I decided to withdraw my offer, something that you couldn't do in 2021. And in doing so, I saw the house go pending with another buyer. But then something happened. That buyer asked for an inordinate amount of closing cost credit, something like $30,000, that did not equal what was on the inspection report for repairs. The seller didn't budge and the buyer terminated. I saw this as a second chance opportunity, so I swooped in and put in another offer. This time, $20,000 less than my initial offer, and the seller accepted. So this kind of scenario could play out, and it could play out for you. Not saying that you should do what I do verbatim, putting in a strong offer and then withdraw and then put in another offer, but just to show you that you have time to wait and to see prices come down. So what is the moral of the story? You can negotiate on price. In 2021, all of those things were off the table in most situations. Add to that the fact that builders in the North Metro area are actively offering rate buydowns and incentives, particularly where tariff-driven material costs have pushed new construction pricing higher. And if you're open to new construction, this is one of the better negotiation environments out there in years. So once again, the buyers who wait for perfect conditions very often end up buying in a more competitive environment than the one they skipped. One kind of catchphrase that we say is time in the market is better than timing the market. Oftentimes spoken in terms of the stock market, but it can also be referenced with the housing market as well. So if you're going to buy a home, the one tip that I would say is to be in that home for at least a minimum of 6 years to allow for price appreciation to take effect, as well as paying down your mortgage over time so that you can see some equity if you had to sell and get out. Anybody that's bought in 2022 or later, surprisingly, a number of them are turning around and selling. And I'm having to tell them what you bought was at the top of the market in 2022. So please don't be shocked to expect that you may just be breaking even at best. So the buyers who act when others are hesitating tend to do better. That's not my opinion. That's what the data across every cycle shows. So sellers are the group that are most at risk of getting this wrong. The reason is simple. Too many sellers are still pricing their homes based on what their neighbors sold for in 2022. That is a very expensive anchor to hold on to. And another thing is that the market is moving faster than what people are expecting. Just from literally 3 months ago as compared to now, the market slowed in certain ways because this is no longer the hot season coming out of July into the fall market. And the reason why is because a lot of people who bought are families who are trying to get their kids into a school district before the school season starts in August. So having said that, I have one home in Duluth trying to sell, marketing it aggressively, doing price cut after price cut. Not something that we want, but we have to do in this market. And in doing so, we're leaving money on the table because if we priced it lower from the beginning, we probably would have sold it during the summer market. Now, this is something that I can advise to clients, but not always will they accept. But this is the kind of environment that we're dealing with on the seller side, the listing side here in Metro Atlanta. So here's the hard data. According to Georgia MLS, 62% of homes that sold in 2025 across Metro Atlanta included seller concessions, averaging around $4,000 per sale. 41% of listings had price reductions before they went under contract. According to Total Atlanta Group's November 2025 market report, overpricing is now the #1 reason homes are not selling. Hint, hint, what I was just sharing earlier. Days on market across the metro rose from 28 to 41 days on average. That's not a coincidence. That's the market giving sellers a very clear signal that they are not priced correctly. In Forsyth County, the picture is even sharper. Metro Atlanta Property Shop reported in April 2026 that approximately 50% of Forsyth listings have had price reductions, and homes that are now selling at roughly 96% of list price. That means if you list at $700,000, thinking you'll negotiate, the market is telling you you'll close around $672,000. Build that into your expectations before you list. So what does winning actually look like for sellers right now? Atlanta Agent Magazine quoted Todd Emerson in their 2026 predictions piece, and his framing was exactly right. Sellers need to price with precision. Aspirational pricing based on scarcity no longer works because the scarcity is gone. Buyers have options and they will move on. When I'm having my listing appointments and the listing presentations with my potential sellers that I'll be working with, I always tell them you're gonna be competing in two competitions if your home ends up sitting on the market longer than you would expect. Competition one is the sales price competition, and competition number two is the beauty contest. The first one is self-explanatory. It all has to do with pricing. The second one has to do with condition. So if the home sits on the market, it's because the home needs more updates and renovations, that if you were to do them, it could help move your home faster, or to have a price cut that is noticeably large enough to have buyers consider. When you think about it like this, a lot of people will always say, well, if there's a huge sale like Black Friday, we're gonna move. But a lot of times sellers are not thinking in that way. When they're thinking Black Friday shopping, they're thinking 30 to 40% off, and that's gonna get me to go to the store and buy this product. But that's not how sellers are acting with their homes. They're doing $5,000 price cuts, $8,000 price cuts, which is very minimal and not enough to move the needle. Even if you mass marketed, say Macy's, they decide to send out an email blast to 50,000 people with 100,000 postcards sent to actual physical mailing addresses. You would think, wow, with all this marketing, they're gonna sell and they're gonna have more customers come to buy their products. But in those advertisements, it says limited time only, just this weekend, 10% off of everything in the store. That doesn't sound very appealing because 10% is so minimal. So when it comes to selling, all the marketing in the world will not get it sold if the price is not priced correctly. So the sellers who are succeeding right now are doing three things. First, they're pricing based on what is actually selling today, not what was selling 18 months ago, or even, as we were talking about, 3 months ago. That means a detailed comparison of recent closed sales, not active listings, not pending, closed. Second, they're presenting their homes as move-in ready. Let's go back to the point that I made earlier about beauty contest. Move-in ready homes with updated finishes, neutral colors, they're the ones getting the offers. And homes that need work are being used as a leverage in price negotiations or being skipped entirely. Third, and this is where I see sellers leave money on the table, they're ignoring the school zone advantage. So if your home sits in a Northview, Chattahoochee, Johns Creek High, or Lambert school zone, that is a marketing asset. Buyers relocating to North Metro Atlanta are making school zone decisions before they make neighborhood decisions. According to Atlanta Area Home Search's Q1 2026 report, homes in top school zones are holding value better than comparable homes in weaker zones. Price your home to reflect that. Market it to reflect that. That is the competitive edge your listing should be leading with. One thing that I will add about a listing that I have in Duluth that has been sitting on the market for a while is that a lot of the feedback is about many buyers wanting a full bedroom and full bathroom on the main level. As you know, most single families here in Metro Atlanta are 2-story, and a lot of the times you'll see all of the bedrooms on the second floor. But sometimes you've got an elderly grandmother or an elderly father who doesn't want to go up steps. There are more people that are living together multi-generationally with more than just the core family. You've also got relatives and in-laws, different kind of situations where you need that bedroom on the main level. So even if you got the pricing down right in the beauty contest or the renovations done right, sometimes that's not enough. So that is why you really have to price it correctly from day one. Almost always it will net more than an overpriced home that eventually chases the market down, regardless if it is that house that doesn't have a bedroom on the main level. This goes without saying for every house. So I've helped sellers across Gwinnett, North Fulton, South Forsyth position their homes in this exact environment. The sellers who follow this framework, right price, right presentation, right market positioning, are still getting good outcomes. The ones who fight the current conditions are watching their homes accumulate days on market and then having to make painful price cuts anyway. Everything I just walked through, the submarket data, the negotiating dynamics, the pricing strategy, that's the level of detail that actually determines whether your move goes well or costs you. So a buyer who picks the wrong submarket right now could end up in a softening area where they could have been in Johns Creek with flat prices and stronger long-term value. A seller who overpriced by $50,000 in this market doesn't get $50,000 less, they get 90 days on market, 2 price cuts, and a lower final number than if they price correctly from day one. So call or text me directly at 770-906-0748 and we'll figure out together exactly what this market means for you in your move, whether you're buying or selling or both.